Morning to you guys in New York. It's 8:45 Eastern Standard Time, and here we go. It's obviously very quiet markets today. The major events, basically, let's have a look first on the disclaimer before we go into the major events and what happened this morning in Europe. And let's go straight onto the charts. Here we are. The major event basically of today was that the Swiss National Bank increased or sets negative rates on sight deposits. We see here Euro Swiss at 120, was on 120 for a very long time with a pressure on it, and it immediately rallied as high as close to 121, just stopped below that, and since then it's coming off. If you look at the Euro Swiss for longer term periods, say on the daily chart, we see how it basically came off all the way, and there was huge speculation coming in because people have the tendency to buy Euro Swiss, as Euro Swiss is supported by the Swiss National Bank. Intervention level around 120. So instead of going hard into the market, they just simply reduced the interest rate to negative. It was speculated that this would happen, and traders expected already in the last Swiss National Bank meeting some weeks back, but they didn't do anything. So while we just still think what's gonna happen, but nevertheless, we still have to see how this is gonna basically evolve to, and I think the Swiss still might have to intervene or do something more because the Swiss franc is still very strong against the euro, and I don't think they can hold this out for much longer. But that's a different issue. Last night we had the FOMC protocol. For those who had time and looked at it, we made also some recordings on that one. And now let's look at the market today after this protocol. Interesting enough, then Wollard, I mentioned already that my feeling was more that the protocol was neutral to dovish, and interesting enough, some economists shared this view overnight and this morning. Nevertheless, the dollar regained on strength. So the fundamental question is why, and the reason why is that the wording was basically that the Fed is going to be patient and evaluate, although they mentioned it's going to take them 2 or 3 sessions before they take action. In other words, not before March, but with a considerable time in respect to the interest rates, not directly connected. The market and considerable time and in the past was interpreted as 6-month period. The market basically says now there's a chance the Fed is going to raise rates after the third meeting, i.e. somewhere in April. I don't buy that for the simple reason that the Fed herself basically mentioned that they're going to reduce the outlook of inflation and basically argue, okay, the oil price is temporary and it's a major driver for lower inflation, but this remains to be seen. So nevertheless, dollar is at the moment bullish based on that respect and hit some levels. And now let's look at cable. We had the move down there yesterday, and this morning and overnight basically cable recovered a little bit, and it's moved already up higher and testing the 156.70 resistance. And here we have our counter trend line for our strategy, which we will discuss in January. On the trend following strategy, that's sort of basically our entry signal for short cable positions on the hourly. In other words, if we have a signal which is below here and confirmed with 2 candlesticks on our hourly basis underneath this trend line, then it's time to basically go short on the cable side. Nevertheless, cable is basically going up. If you see on the weekly chart, you all know the picture. We are still basically hanging here at below the resist at 157.80-90, and just a break above this, or the 157.05 brings it up back again in direction 157.50 in direction then 158. So potential is there, but currently with the US coming to the market and they're buying the dollar, we can see this quite clearly here. The movement is going up, and therefore, in other words, red numbers here on indicating selling, and blue numbers indicate buying. But cable is basically a little bit coming with pressure. We kind of see this now on the 5-minute chart. we see basically topped here around 156.65. Since then it's a little bit under pressure, and once it's going down under yesterday's lows, targets are on the downside 155. So basically we are coming close to our entry level. I have not decided whether we'll take a position. Most likely not, because the market is going to dry out drastically as of tomorrow. So there's no really sense to go into a position on the trend base unless this becomes very, very lucrative. For the time being, there is no real entry signal there, so we just have to wait and see. On dollar yen, we mentioned it already. And we have to go back to the daily here to see the big picture, where we had the run up to 121 and we had the correction to the 50 Fibonacci level. And I mentioned already last night, irrespective of the Federal Reserve meeting or not, dollar yen is based in a strong uptrend, had its correction, and basically the buyers gained control again, and we're basically hitting or overcoming now with yesterday's push based on the hawkish interpretation of the market participants, overcome the resistance line, and very critical resistance is now the 119.02 or 05, and the next resistance, which becomes very interesting, very important. Let's look at the 4 hours. We can see this much better here. Is the 61.8 Fibonacci resistance coming in basically at around 119.40, and then the zone up to 119.55, 119.85. Once this is taken out, the market is ready to go direction 121 again, and 121.50, and once broken, the next high is 122 and then 125. In other words, there's big potential basically going up. So we see here on the weekly that we have 1, 2, 3, 4, 5, 6 weeks up. Normally it's a rule of 7 after 7 straight candles. Watch out, the market might turn if you take this one and take this one along with it. If, in other words, you can also take the Fibonacci from this low here, where we had basically the reversal. You have here the hammer, and then with the reversal it's 1, 2, 3, 4, 5, 6, 7 candles, then the correction, and now the market basically starts reversing here yesterday at 115.70, and now the potential is that we're gonna retrace. Most likely we might stop here again 119.65, and if it then turns back down again and below the 118 level, 118.20, that means there's again potential for the decline on the downside. I mentioned this potential head and shoulder formation on dollar yen. We got shoulder 1, head and shoulder 2, but here's the neckline, and basically we are as long as we are still not to break the shoulder line, which comes in around 119.55, there's still potential theoretically that the head and shoulder formation will come in place. In other words, the might go up as high, the market turns then down and breaks the neckline, we're going to go back down all the way to 120.50, but the probability is declining with every 20-30 pips going up higher. And don't forget, the overall direction and the trend is upwards. Now the other theory point is we are still above the 60 and 240 exponential moving averages on the daily chart, but on the 4-hour chart, and this is basically the very important one, just take this one out, we are basically just hovering, just broke the 60, and as long as we are above the 60 and the 240, and you see how the daily is basically at the 10 daily, the 10 hourly is turning bullish. Once we are above them, then we have basically a strong trend. We see also here now our counter trend entry line. In other words, if the market would break this would regain a short selling signal, where then based on my strategy we would go short. And you can see very clearly since 115 there is no short signal in dollar yen. We're just going up higher. The opposite is true. We had the move up, then we had the correction, and here you can see this trend line, which came from Japanese market side, Asian markets down to Europe, and the opening basically we just broke this approximately in the morning on the upside again, and since then had a sideways move. Trend lines, if you want to trade them, always should be broken with a certain momentum. and you should not buy or sell into resistance. Now basically here we had very strong resistance, so it didn't make much sense to go into the market, as this candle very clearly shows you broke of the trend line. Now that one you should have gone long. Basically, if you would have gone long, basically you would have sort of had smack on your face, in other words, because the market just came back and sold off and then went to a sideways market. And now the US market is taking on the decision and pushes the dollar yen higher, and most likely we will test the 119.50 still today. But as mentioned earlier, no inclination as yet to look at a position. We will just simply have to wait and see. In other words, the dollar is being bought with the New York opening, and we're going to see this also in euro dollar at the moment. Euro dollar managed to break the very important 123.65 level. Here we go. Let's have a look on the daily chart again. Back a touch. All right, so we see this very clearly in the daily chart. I take this line out. So where we are now is the 123.70 here. There we had the very strong support level. In the past, that was the year's low so far, around 122.30. Then we had the correction up to 125.70, and then we had the sell-off 1-2 days, and now the market is basically approaching the year lows again. Once broken, the market is poised to direction selling 122, and maybe even this year direction 120. Unless he finds his support and turns around, but there must be some fundamental reason for that. And overall, don't forget, the tendency in euro dollar is a bearish tendency. We can see that very clearly now here. But there we have only just 2 week corrections as the weekly chart, 1 week correction, while another week holding steady, and this basically looked pretty positive initially for the bulls, but basically was destroyed yesterday, in other words, with a counter move. And if they're not able to turn this around, maybe by Friday, in other words, to end Friday up high above 123, then it looks fairly bleak for the next week and the Christmas season, because in thin market it could easily happen that the market is just going to collapse down. On the Aussie dollar, we have basically yo-yo as we call it, going up and down. But what we can clearly see, if you go on the weekly chart, hang on, yeah, on the daily chart looks better. You see the consolidation sideways move, and our downtrend basically, it's strongly intact. Here we are taking, say, you can take down this trend line here. That's a stronger trend line, and basically covers the daily downtrend trend line, and we're well in this area on the downtrend here in Aussie dollar, just basically finding maybe a base above 80, 85, 50, 81. Let's have a look on the hourly chart on this one, and we clearly can see that the market found a base basically on this kind of level, also form a trend line, which found some support here. We found some support here, the sideways movement, so it's around 81. It seems to be the supporting line for the time being, but Aussie has to go and pop above 82 to get any chance, get a touch more corrective, and bullish it's only gonna get above 85. So tendency here also in the Australian dollar is actually way down, especially if the dollar gets stronger. Most likely it's going to suffer. But for the time being, the interesting structure, if you look at this, we have basically Aussie being sideways, euro dollar still hovering above the 122.50, the 122.30 level, and it's not really going anywhere. If you look at the hourly charts today on the euro dollar side, here we are. Hang on, let's make it easier. All right, we had this move up today to overnight to 123.50, and then basically the market is now off. So we're basically off 60-70 pips, and the tendency is there, the trend is there, it's just basically meaning going down. And this happened the last 2 hours. Basically the market tried to go and cling above the 123.05 level. It did not manage that, so basically tendency obviously is still on the downside in the euro dollar side. What one can do now, if one wants to play the upside again, our strategy would mean we would enter this sort of counter trend line from the last highs basically, and once this one is broken on the upside with confirmation, then the market would go up. For the current time being, we basically had the opposite. If you take this line here, we basically had here the breach at 123.40. There would have been a sell signal, confirmed sell signal that the market is not coming back this line anymore, therefore confirmation, and one would have taken on a short position in this area. So that's a sort of strategy, but I will discuss this with you guys in the new sessions in the beginning of next year, where we have a pure strategy session on this hourly entry strategy for trends. And the trend following strategy is based on the idea of making not 10-20 pips a day, but basically run a position for 100 pips and more. Now, how are we doing basically in gold? Gold is still in the sideways movement. Mentioned a couple of times that we are basically hanging on to the support around the 1180 level, 1185, 1192. That's the key support which we are holding. As long as this holds, market is going down, and above 1235, 1237, market is going to go up higher to 1255, 1260, and then potential direction 1300. But currently we're still basically hanging into this trading range. And that's basically it on the gold side, so nothing new there. So it's interesting that cable basically is holding up pretty well, with dollar being bought actually, which we see the dollar buying against dollar yen, and we see against euro dollar, and the Aussie is also keeping stable. So basically what we have here is a little bit maybe also some crosses going through the market. And on dollar yen, it very clearly looks like we're gonna try the test the 119.55. So to finalize, thanks very much for your attention. So that's the market for today. I think gives you a little bit of a picture. It's going to get quieter, and I said New York is pushing the dollar to the upside. So we might even see next tomorrow on the last active trading day, dollar yen around 119.60, maybe even a break higher, and maybe dollar or euro dollar at 122.2030 as potentials on the downside. But this is all based on high speculation on the interest rate side and position closing and increasing less liquidity in the market. So it could easily, the market can easily turn around if one big player comes in or two and moves the position around, and then the market just goes all the way back down. So it could be also very well interesting here in dollar yen, for example. That's where I'm keeping an eye on. Establish a short position once the market is moving below our trend line here. In other words, if the market goes up to 119.50 and then turns around, that might be very interesting to increase a new trend position, short position for 700 pips on the way down. If the market is doing that, with the upside risk being like 25 pips, for the simple reason that once the 119.65.75 is broken, the upside, then the market is prone to go higher. So if you're basically on the shorting on the top of the range, upper range, or buying at the bottom of the range, same buying holds true for euro dollar. We could see also very quickly a reversal in euro dollar, or we see the market just going down another 200 pips. So therefore you can play also the ranges, but we discussed this also more in detail and depth into next year. For the time being, I have no intention actually to increase the position at the moment or put a new position. I'm flat on all positions for the time being, and entering into the New Year's and the Christmas season. For the simple reason is there's going to be a new year, and new year means new chances, new trends, and we have to see how the market is going to develop. But just keep in mind, if you're looking at the markets between the seasons, that you might see very strong, very interesting movements. So one or the other might be inclined to put in a new position, but don't forget, I've seen movements between the 30th, 29th, 30th of December and the 1st of December, and very big numbers because there was no liquidity. Thanks very much for your attention, and I'll speak to you again tomorrow. Bye bye for now.